The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome back to the USA. We are back in Tucson after a late arrival last night. I want to go over what we did in London so you folks will know what we've been doing. We were not there for R&R. We were having some fun. About 15 years ago, a gentleman, I was giving a seminar with, it was actually 2005. I was giving a seminar with Tom Hugard, and a gentleman was there. It was a 2-day seminar. We did some live trading, and it went pretty well. But this gentleman came up with me and he said, I'll be at your office next week. I want to spend 5 days with you. I mean, nobody ever says that. Well, anyway, he came over. He ended up spending a little bit more than 5 days. I think it was about 8 days. But since that time, we've become fast friends with everybody in the family, and we go over there. He invites us over just about every year, and we spend 5 days with him. This time I spent Sunday through Friday with him, and then we had the seminar on Saturday and Sunday. But in those 5 days, I saw technical brilliance like I'd never seen before. He's taken technical analysis to a level that I've always dreamed I could do it, but the way he does it, of course, is very, very sophisticated, using computers and drawing these incredible Fibonacci spirals and see how things line up. It really, it's a real testament to how nature is in the market, and also some of the astro stuff that's there is, amazing. His specialty, of course, is sacred geometry, and he has an immense library of all the things going back in as far back as you can get data and information. He has access to that because he's purchased it, and he enjoys it very much. But the seminar was presented by Tom Hugard, who works with Dr. David Paul, who's a mathematician from Johannesburg. And I met Tom in 2004 in Las Vegas. Bryce Gilmore was giving a 3-day seminar there, live trading. He had 35 people, and he invited Mark Douglas and I to come over and spend just a visit with him, because he used to hang out at the trading room in Pismo Beach all the time. So it was like a little reunion. We got there. Bryce got hung up, and he wasn't able to make the live session on Friday. And so I took over, and Mark helped me out, and it really turned out to be a really great seminar. And that was one of those days where I couldn't do anything wrong. Don't have those very often, but it went really well. And Tom was in the audience. He was just a young fellow there. He's 35 at that time, just turns 50 tomorrow. And he was another one. After he left that seminar, he came over to Tucson and spent a few days with me. We became friends, and we've traveled back and forth across the continent many times giving seminars. And he worked for City Index, which is the equivalent of CNBC over in the UK, and he was their point man, and he did that for, I think, 7 years. And then in 2009, Michael Spencer, who owned it, had a chance to sell the company, and he did, and he was letting everybody go, and usually everybody got a 1 or 2 month severance pay, and he gave Tom 18 months severance pay, and that allowed Tom to go out and start trading on his own. And now he's trading with size, folks, that just absolutely is unbelievable. We were looking at these markets together on Friday night. It was Friday afternoon when the markets were still trading, and we had some ideas that maybe the market was going to gap down on Monday morning. And he sold 300 Dow Jones contracts, and he covered them on the open, which was down 200 on Monday. And we were doing this in front of the people that we were working with. So it was really a lot of fun. By the way, I want to say hi to my friend Kent over in Denmark that's driving to work today. Kent, drive safely and make sure you keep your hands on the wheel, and we'll see you in February probably. Anyway, what we did as far as showing the folks, Tom showed what he was doing. He did all this with day trading, folks. People think they can't make money day trading. Let me tell you, folks, he's just not making some money. He's making a lot of money. I'm talking every month is 6 figures. So he's and a lot of months are 7 figures. So he really knows what he's doing, and he's doing incredibly well. But the thing that we focused on, because there was a big news announcement, with the drones hitting Saudi Arabia, just like they did in Kuwait and all the other stuff that was going on, we decided to let's focus on the oil market just to see what was going on. So what we did, and I'm going to let you folks do some of this work because it'll help you a little bit down the road, but this is the one for gasoline. What we did is we prepared what should happen on Monday for gasoline, and these were the numbers, folks. I mean, if you look, I don't make these up. If you look at the numbers for gasoline and look at the numbers for heating oil, and especially crude oil, folks. Crude oil made the exact 786 retracement of that whole move to within 2 cents. I mean, that is just absolutely amazing, in my opinion, that they can do that. But look at all of them, and this is one of the patterns that we focused on, which was the 135 pattern. And but anyway, that's neither here nor there. Now today we find out that the Saudis say, "Gee, we're going to be up and running next week or at the end of the month," so it really wasn't very bad at all. Some people are saying that Saudis actually did it just to get the price of oil up so they get ready for the Aramco. I'm not a conspiracy theorist, for I don't want to get into that stuff at all, that's for sure. But anyway, those were just some of the things that we worked on. The big turning point in Tom's career, he's been quite successful trading for quite a few years, but a couple of years ago, David Paul, who works a lot on, because his degree's in mathematics, he works a lot on martingale, the martingale system of, adding and subtracting numbers and stuff like that, was basically he showed Tom that if he would press his winners, that he would make far more than just trading one, trading and trying to make one unit and then go on to the next. So what Tom does, once he starts shorting, he just keeps shorting and he keeps lowering his stops until he gets stops. But he's incredibly aggressive. He's only right about 35% of the time, but the amount of money that he makes is it's really beyond belief. So it was really exciting. This is the first time in all my speaking, and I mean, I've spoken since I was doing something in the 1980s, of course, but since 1985, I've been talking quite a bit, thousands of people. This is the first time I've ever gotten a standing, well, I was there with two other people. They were probably giving them the standing ovation, but they gave us a standing ovation, and they really enjoyed it. So it was worthwhile. We had a lot of fun. And of course, the time lag is catching up to me, but I'm still hanging in there. Okay, when we get back from the break, we're going to talk about the markets, and I wanted to share with you what I learned. And it's a little esoteric, and you may or may not believe it, but by golly, something's happened, but we'll have to wait and see, but we'll cover that. The other thing is Mr. Z is going to call in a little bit after the hour, at the half-hour break, and we're going to talk a little bit about the natural gas. As you know, we've been watching that for quite some time, and Mr. Z's been riding that puppy all the way up, and so what we want to do is to look to see where it's going to go, because I think we're going to have some pretty good chance here. So we'll have to wait and see what's going on with some of these things. We've got a break coming up here to pay a few bills, and then we'll be back to talk a little bit about the stock market and the bond market and open interest and la-di-da-di-da, the usual stuff that we usually go through when it was quite a bit.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, folks, this next chart is for you folks that are Fibonacci aficionados, or whatever you want to call yourselves. This is the S&P Cash Index. It's the monthly, showing the 3-drive to a top pattern, 135. You can see that. That's a 135, 1, 2, 3, 4, 5 expanding triangle. It's also a 1, 2, 3 drive to a top pattern. It is 10 months from top to top, which is about right. And let me explain to you what if you'll remember, those of you that follow me on 24/7, you'll notice that the 3 highs that we had there, that first high in July, I believe was on, I don't remember the exact, I think it was July 15th. We made a high at that point and we dropped 50 handles. And at that time, my friend Allah told me that, look, this market's going to go up one more time. It still hasn't completed. And I said, oh, it has. And as you can see, he was right. But here's the key to what we were watching here that he showed me that is, and believe me, folks, this guy works with precision like you. Well, never mind. Anyway, you'll notice the swing. This is for the Fibonacci folks. You notice the swing between 2 and 3. That took 1, 2, 3, 4, 5, 6, 7, 8 months. The market came down 3 months, stopped right at 4, and then the move from 4 to 5 was exactly, I mean, folks, I'm not joking, and within 2 cents of the exact 1.618 expansion of the 2-3 leg. And the 2-3 leg was 1, and the 4-5 leg was 1.618, and that's what brought us in to where we had on the 13th when we had the new moon and we had the if this is in fact a high. Now, there is a possibility today with the Fed doing this thing that there's a possibility we might take out that high of 30.23, I think is what it was in the E-mini S&P, and make on a real heavy spike somewhere around 30.40, and that's all it should be, is a spike. But this is a potentially very bearish pattern if it does unfold. Now, all I did was I said, okay, if that's correct, what happened in 2009? So what we did is he walked me through 2009 and what happened on March the 5th through the 9th, a very similar type situation. So anyway, this is what I was doing, during that time, watching some of those things occurring. Now let's move on to the bonds. You remember sometime a couple weeks ago, I was talking to you folks about the Treasury bond market and the fact that open interest was dropping. That was not a good idea. It was not a good thing to be happening. And of course, the open interest has, continued to be negative. And as we bring up the okay, he wants me to talk about the rate of ascent. Sure, I'll be happy to do that. Just a second, Bill. Thank you for the question. But let's get this thing up here, and we'll see here on the Treasury bonds. We got up to these this 132, basically a vertical move, and during that time, those last few weeks, in fact, the last 10 days, open interest was dropping, and no one was paying attention to it, and that's what's happened. Now, in the gold market, the open interest is still increasing, but in the silver market, it had some negative things, and that's why the silver has been more bearish than the gold. But I'll do one thing at a time, the best I can. But we're coming into some strong support today in these things, so we could get a pretty good rally. Frankly, folks, if the December Treasury bonds don't get above 161 to 162 today and start down, oh dear, they're going to take those bond boys to the woodshed and teach them a lesson that they're not going to get over. Okay, Mr. Bill asked a question on the chart for the S&P. I had put the rate is those were just WD Gann lines is all they are. It just shows the 2x1 and the 4x1, and all I was doing is what we did. And well, John Jameson and I, we were watching Tom do this trading for quite some time, and so John said, "Why don't we go back and reconstruct what he was doing?" Because he presses when the market's really trending strongly. So we want to find a real strong trending market. So that's what we did when we were looking at the rate of ascent. So if the market is moving from A to B at an angle of 72 degrees, which is the 2x1 line, then it's much stronger than the markets that's going up by the 4x1 line, which is the 45-degree line. So that's what that means. If the market's thrusting really strong, you want to try to look at that. When we get to talk to Mr. Z here in about 20 minutes, he's going to bring a situation up that's going to be really right down our alley, something that we've been watching for quite some time. When Mr. Z alerted us to the price of natural gas when it was $2.18, it's now 50 cents higher than that. And folks, this thing is one time we got as high as 4.00 when Mr. Z was in it. So we want to be watching this one really closely into the future. But that's what that line is like. I don't use those, Bill. I just use it the old Italian way. I eyeball it. If it's going up really strong, yep, it's a really strong trend up. That's it. And if it's not going up so fast, I say, well, not going up as fast, but that's really, what I'm looking at. I can look at Bitcoin, and I will. I believe I can. Oh, yes, I can. Let's get it up here, and we'll see here. Bitcoin is, just get this up here and take a quick look at it, and we'll get it here. You can see here, if you look at it really closely, we have a nice little head and shoulders bottom there between the 15th of August and the middle of August, around the 20th, and then we have around the 10th, we have a move that this is a daily chart, so that should hold. That level of around 10,000 should hold. If it doesn't, that means we could be going down a little more. Now, remember that Bitcoin and gold have been running hand in hand, but believe me, that changed because gold exceeded off the top of this chart and the Bitcoin did not. So I'm not sure where it's going. I don't trade this. I never have. I do look at it technically because there's so many people in it that it follows the technical numbers. You could do them yourself. Like Twentyman says, defy human nature and do the work yourself, and you'll be able to see it. But that's what it looks like. It appears that it wants to wants to move higher because of the higher bottoms that we have in here. Pretty good support, and that head and shoulders pattern is not perfect, but it's good enough to call a head and shoulders pattern because the right shoulder is much higher than the left shoulder, and it's also at a 61% retracement. All of that makes it sound like it should hold at that particular level. So those are a few things that we're watching. Today is FOMC today. Watch that 11 o'clock time frame, folks. It's going to be rocking and rolling everywhere. I'm looking for a spike, hopefully, in some of these stocks in the stock indices. But the volume, the volume in the stock indices has been pathetic, actually. But the open interest in the S&P is really it's been quite amazing. That when the market broke out to new high, marginally. I mean, this was last Thursday and Friday, and again yesterday. There was nice increases in open interest. I mean, substantial, even with low volume. There were a lot of new buyers coming in, so that in itself is unusual. So we were watching that. As soon as you see a drop in open interest at any one of these levels, then you're going to say, "Uh-oh, there's trouble in River City," much like there was in bonds. But remember, bonds stayed up there for just about 2 weeks before they decided to do it. Folks, this is a major top in that bond market. Something has happened, and they could really hurt a lot of folks out there because they've turned those bond speculators from mom and pop to bond holders, and that's a whole other value there. So we'll see. As far as some people have asked me about the politics and the Fed and all that, it means nothing to me. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've tried to post a chart of crude oil up here. I hope it worked. Did it come up? No, it did not. Give me 1 second. People have asked me to talk about the crude oil a little bit more, so in fact I will. Here is the chart that we had. We were looking at this is actually, we had this prepared before. This is actually Monday's data, and we finished the seminar 6 o'clock Sunday night. So this is what we were assuming it would be going up to, is that 78% level. And of course, it hit it pretty much spot on. And it was really interesting. We had one of the folks in the room there. We had a nice crowd, too. We were at the University of London, and we had one of those big auditoriums where the seats go way up. And gosh, you could hear a penny drop at the back of the room from the front, so you didn't have to use a microphone or anything. So it was really nice. And everybody was talking about the drone strikes and all this stuff, and they were talking about crude oil opening between $4 and $10 higher. And in fact, it did open $9 higher, and we were expecting it. And we did crude oil, and we did heating oil, and we did gasoline, and they all did exactly the same thing, which made it nice. Fortunately, I had all my trading buddies around the country to make sure the top stopped right there, and they worked out really, really good. But one of the things that they got a big kick out of was they asked me, have you ever been through things like this before? And I said so many times that it's just, but they asked me the most memorable. And of course, one of the most memorable, and I don't mind repeating it because I do get emotional about it, but it was back in August of 1991 when they were getting ready to have the war to go into Iraq and take care of Saddam Hussein. And Norman Schwarzkopf, Stormin Norman, was the commanding general of the troops. On his desk, he had a big copy of The Art of War by Sun Tzu, which focuses on warriors that attack on the darkness of the new moon, and that was the new moon. So I figured it was going to be that day. That day, crude oil was trading at $42 a barrel. Gold had just completed a big ABCD pattern, and also stocks had made a major ABCD Gartley pattern. And so that afternoon, it was, I believe it was a Wednesday, I went home long stocks, no overnight markets, of course. I went long stocks, short crude oil, and short gold. My daughter Jill was in the office. She was home for holidays, getting ready to go back to UCLA to get her master's degree in psychology. And anyway, what happened was I went to get my hair cut. My daughter called about 5 after 4, and I was at the hairdresser, and they called me over to the phone. She said, Dad, do you still have those positions on? I said, yeah, I do. So, Dad, she says, you're in big trouble. And I said, why? She said, turn on the TV. They're bombing Baghdad. And I turned it on, and of course, they had it lit up like a Christmas tree. Of course, it ended up being a 12-hour war. And the trouble is, when I got back to the house, I started to call the overnight desk. And I was using the Drexel overnight desk. The old Drexel, it was Goldberg Brothers. They just cleared for Drexel, but I called them and I couldn't get through. When I finally got through, they told me that the market was in total chaos, and I said, "Oh boy, I'm really going to get killed here." Anyway, the first quote they gave me was crude oil, and I said, "Where's the quote?" He said, "There are no bids." And I said, what do you mean no bids? He says, no bids, $5 lower, $6 lower, $7 lower. There's not even one trade there. That's how much lower it is. I said, where's gold? He said, limit down. I said, oh, my God. And we didn't have a stocks, But anyway, stocks have still left that gap, folks. Back in August, I believe, of 91. I think it still leaves a gap there, as I recall, but the old gray matter sometimes slips away. But that's what happened. And, the thing was just, I won't go over the one that happened in 1980 in October with the Iran-Iraq war. But look at now what they're telling us, well, this will all be fixed in a matter of a few weeks. From total devastation to being fixed in a few weeks. Boy, you wonder about fake news, don't you, boys and girls? So anyway, prove it to yourself, folks. Take a look and look at the doggone thing and see what's happening with the crude oil, the gasoline, and the natural gas, because that could be the main thing. So that's pretty much it. No, that's not the same Goldberg, Mr. Z. The Goldberg I'm talking about, the Goldberg brothers in New York, they were metals traders, and they cleared all the stuff for Drexel and the Hunt brothers and all that stuff. They were big involved with that, and that's who Drexel cleared through. No, the other Goldberg, those guys are from the CME days, and that's what we're looking at. So Mr. Z is going to call in here in a few minutes, and we're going to talk a little bit about the natural gas. Mr. Z, why don't you call in anytime you're ready? Because the old cowboy could sure use a little bit of help. Folks, you got to start giving me a little bit of help here, or I'm going to be riding out into the sunset. I can't do this every day because I'm wasting a lot of time. This is the most critical time of the day, and I really need to help. I need help here. So try to give a little bit of support to TFNN. They got a great group of people here, but we need your support. So please do that if you get a chance. What I'm going to do now, we'll get ready here for Mr. Z's presentation, or talking to us about it. But what I want to do is I will bring up his chart. Oh, what did I do with it? I posted it, and now I've lost it. Shut the front door and raise the rent. Oh, dear. Well, I'm going to have to talk here and just till I get it up again. So give me a sec. Oh, there's a little Freudian slip. Let's move on here and see if we can get this from Mr. Z, and then we'll be ready for when he calls in, because I think there's a really big move coming here in the natural gas. I don't think there's any let's get back here, second here. 1 second, and I'll be right there. Let me see, here's where we are. Oh, come on. I got to save these, folks, so just give me 1 second, and then I'll get this ready to do this, and we'll get ready to send this up here. All righty here. And Mr. Z, you on the line?
Hello, Larry. Good day to you.
Hey, John, how are you doing, my friend?
I can hear you fine. Can you hear me?
I hear you perfectly.
Oh, excellent. Excellent. Well, boy, I tell you, I am disappointed. I didn't think in advance to schedule with you to be just one of the audience members attending your deal over in London. That sounded absolutely fabulous.
Yeah, it was a lot of fun. You would have loved it, John, because, well, what you would have loved to be a bird in the room when I was sitting there learning for Sunday through Friday, watching the market evolve like I'd never seen before. That was the fun part. But anyway, let's talk about natural gas. You've been very bullish on you see. We see your den screen. Just a minute. What am I doing wrong here? Hold on just a second here. I'm operating on about 3 nights sleep, so let's get this up. That should be Mr. Z's chart, I believe. Let's double check it. See if that's it. That should be his chart for natural gas. I think this has got a chance for a real big move, Mr. Z. Look where we're going. We're going from what, 210 to 270? And
okay, yes, Larry. Let me share with you this first. You had been highlighting in the Tiger's Den, and I'm guessing in your newsletter, that you were a buyer of natural gas. That was back in the early August time frame, and I believe you were trading either SEP or October natural gas at that time.
Yes.
You know
we
well.
got it. We have to pay a few bills here. Will you stay with us, my friend?
Surely.
Okay.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
Tom O'Brien will be hosting a special 60-minute live webinar Wednesday night for Gold Report subscribers titled The Next Leg Up in Gold is $1,794. Find out why. In this 60-minute webinar, Tom will be discussing how the bond market moves the gold market, where the gold demand trends are coming from, how gold outperforms fiat currencies over time, how gold trades an average of $110 billion a day in value, along with many more topics. Subscribers to the Gold Report just closed out 3 positions in the last week for profits of 28%, 35%, and 51%. Now is a great time to sign up for the Gold Report. You don't want to miss out on the next big run in gold and gold equities. Sign up now for the Gold Report by visiting the front page of TFNN.com and get ready for Wednesday's live webinar with Tom O'Brien. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Mr. Z, unfortunately, I don't have a February natural gas because I've been traveling for 12 days and I haven't been focusing on that. I've been focusing, of course, on bonds and stocks and currency. So I will have that a little bit later moving into the February contract. I did have a December contract, but frankly, I'm having a hard time pulling that up this morning. So let's just talk in terms of what we're going to think is going to happen. Let me ask you a question, Mr. Z. The spot natural gas, have we been above 270?
We have not.
Okay, that's important. And the reason why is if you look at your chart, that's a 1.618 expansion. Just when crude oil was making the 78% retracement, natural gas 78% retracement, heating oil 78, and the gasoline was making 50%. That number was a 1.618 expansion. So I'm expecting a pullback here. I'd like to see 2 weeks if I could, but they don't always give us what we want. But that's what I'd be watching for is a possibility, because this has a really good thrust off of a major bottom, as you've already shown us many times. So that's what I'm looking at. I imagine the February is going to look pretty much like the December, I would assume, but that's all I know.
Very good, Larry. Just by way of background, every summer in natural gas futures trading, I scrutinize the nearby contracts out, that'd be the August, September, October contracts. But I always look at the January and February contracts as well. And of course, we all know demand for natural gas is highly seasonal with winter heating here in the U.S. And as a consequence of that seasonal demand spike each winter, the Jan and February futures contracts will always trade much higher than the summer and fall contracts in any given year. And so every summer, I always look at the winter contracts, and I look, in addition to the spots, and I look for, if the market's down, and the market's not always down dramatically in the summer on an intermediate trend basis. But if it is, I focus and fixate on those January and February contracts looking for an entry position. And I'm just going to try to post in the Tiger's Den now what I saw in that February 2020 contract back in August, and it was way down at a very low price for a winter contract, and here it comes there in the Tiger's Den is the February 2020 contract, but it was down at $2.50, $2.45. And if we get a colder than average winter sometime, we could have February natural gas futures go to 4, 5, or 6. And just be very clear, people in the Tiger's Den know these facts because I talk about them every fall. But the last time the United States, the continental United States, CONUS for short, experienced a colder than average winter was the winter of 13-14. Every year since, 14, 15, 16, 17, 18, so 5 consecutive years, we've either been average cold winter or warmer than average. One of these days, we're going to get a colder than average winter. And given as much natural gas as we're now exporting, and mind you, because of horizontal drilling, fracking, natural gas production in the U.S. has grown quite a bit, and we are exporting as a country tons of the stuff via pipes to Mexico, and now on a growing basis via LNG export terminals out of the Gulf Coast and the East Coast. And so one of these days, whether it's the winter of 1920 or a winter thereafter, a colder than average winter will occur, and the United States, and natural gas will surge more than average and drive price higher than average for a typical winter. And whenever that occurs, I hope to be long. On the FedNet gas contract, Larry, the price got up to $2.90 yesterday, which is an exact Fib 618 versus its March high at $3.18, and we backed off 5 cents. My question, Larry, to you, when you see a market go to a 618 pause and then blow over, how do you handle that as a trader getting back long?
Well, if you get out and take profits and the market keeps running and you want to get back in, this is why Tom does so well, is he doesn't mind buying strength, because once it, you know how I feel about 1.618, John. You and I have talked about that many times. Once the market goes past 1.618, I mean, there's no numbers up there to me to even contemplate. So of course 2.618, but that's way up there. So once it goes above 1.618, you're in a running market. So you're certainly trading in the direction of the trend. All you have to figure out is how much money you have to risk to get on board that horse. And you're very good at that.
Let me stop you there and ask you directly. How do you Larry Pesavento, a skilled trader of 50 years. How do you handle that situation?
You missed part of the word. It's unskilled, my son. Unskilled. No, I haven't done that until I saw what I saw this past week. I realized that these horses have to be ridden when they're coming down the stretch, and that's what happens when you have these monster breakouts. And I'm going to bring a little pattern to my 24/7 people that Tom uses. That it's very simple, but I'll you know what it is, but it's simple, just a little breakout method. Once the market backs off a little bit and takes out the previous high, and I'm just talking about a 15-minute chart, if it takes out that high, the previous chart at the 0.618 level, he's a buyer, and then he puts his stop below that bar. So your risk is very small, and you're trading in the direction of the trend. You're trading in the direction of the opening price. You got everything going for you that you could possibly ask for if you're walking into a casino. So that's what he's doing.
Let me just share this with you, Larry. I will do, and thank you for answering that question. People in the Tiger's Den saw yesterday that I exited a February nat gas futures long position at 2.900. That was just intraday. Posted that live as it was happening. The high is 291.5. The current is 286.2, so it's backed off 5 cents nicely. Mm-hmm. And I'll just tell you, I'm going to use exactly those tactics that you just laid out. Namely, if we get over 291.5, using that 15-minute bar, I'll just go with. So thanks so much, Larry, and welcome back.
You bet, my friend. Yeah, thank you, my friend. We'll take a little break. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've asked to talk a little bit about the corn. Went down, made that 3 drive to a bottom, bounced up a little bit. But take a look at the December hog chart that Ruby asked us to take a look at. She was interested in that quite a bit. You'll notice that it went to a really nice spot here. Hold on one second here. A really nice spot. On the downside, as you can see, we had the triple bottom down there, and you'll notice that big gap there. That was limit up that day, and then it's still running. It's trading around that level, around 68 or 67 today. So any 382, 61% pullback on this would make it look pretty good. Sugar had a really nice move off the bottom, and then it pulled back to a 61% retracement. So it's very important that sugar holds that recent low that we had. That would be one that would be very, very important. But if you'll remember, you know, in the 24/7 newsletter, and I posted here in the room several weeks ago on the CRB index, making that huge 3 drive to a bottom pattern that completed absolutely perfectly in time and price. That's when the grains turned. That's when the cattle turned. That's when hogs turned. Crude oil was already moving up a little bit, but that's telling us that maybe these commodities have a little bit of more to the upside. Even copper had a nice little bounce. So that's what we're watching. This thing today with the Federal Reserve is going to be interesting because, frankly, in all my years, I've never seen so much pressure put on the Federal Reserve. The market's putting more pressure on them than is Mr. Trump. The market is really looking forward to at least a 25 basis point and then possibly a 50. And if they don't get those, then that would be a possible reason where the market might move down. But the pattern is certainly, not very positive right now. We're coming to the end of the show. Tomorrow, what we'll do is we'll talk a little bit about what Bill Meridian sent out. I believe it was over the weekend, what he was looking at in the market, and he believes that there's some negativity between the 16th into the 22nd, I believe, of October. And he believes it's still going to make a higher high, but he still thinks there'll be a correction possibly at that time. But I'll share that with you tomorrow. So live every day in an attitude of gratitude, and may God bless.